Look, a lot of traders think they're losing because their entries suck or insert whatever excuse here. They're wrong, right? They're losing because they don't actually know what decision they're making when they click buy or sell. And that one mistake explains just about everything, right? Why strategies never stick, why signals don't work, and why copy trading is complete bullshit. Because if you don't understand the decision that you're actually making, you don't learn when you're wrong. What do? You just reset, right? And resetting feels productive. It feels like you're doing something, but it's not. So here's where I went wrong for years and where most traders actually go wrong. And it's not intelligence. It wasn't effort. It's not even discipline, at least not at first, right? It's how they're thinking about the entire problem generally, right? Retail traders mash everything together, and that's an issue. Strategy, entry, risk, timing, psychology. It's all mashed together. And all of it collapsed into one moment, one click, one trade. And once you do that, you've already lost the ability to improve, right? Because now every loss feels identical. It's the same, right? You don't know if the idea was wrong, right? You don't know if the timing was bad. You don't know if the market was just in a state to pay you, right? And all you know at the end of the day, did you lose, right? Is you lost? So your brain does what it's wired to do. It looks for relief. And this is a dangerous cycle, and it's the cycle, right? You take a trade, it didn't work. Maybe it stomps you out. Maybe it chops you to death. Maybe it goes your way, then reverses and just tags your stop by a tick, right? We've all been there. And so you say, all right, maybe that one was just a bad luck, right? So what do? You take another one and then another one. That doesn't work either, right? And then look, now the story changes. Now it's not bad luck. Now it's what? It's the strategy you're blaming or the market. So what do? You don't slow down. You don't isolate, all the little nuances or variables. You don't ask what actually failed. You reset. You open YouTube. You type something like best trading strategy or high win rate setup, right? You watch a new video. You see a clean back test that someone cherry picked for their video. You see perfect entries, right? You hear just enough confidence from that person to believe this one is different. So what do? You grab a new indicator or a new template or just a whole new system, right? And you start over. And that feels good. It feels like you're working. It feels like you're learning. It feels like you're moving forward, doesn't it? But you're not. You're just changing the wallpaper. And here's the part most people do not want to hear. That behavior guarantees you'll never get better. Not slower progress, not delayed progress, no progress. Because you're not testing ideas. You're emotionally reacting to outcomes. And markets don't reward reaction. They reward understanding. And here's why this loop can be so dangerous. Every time you reset, you erase the evidence. You erase the data, you erase the context, and you erase the lesson, right? You never stay with an idea long enough to find out if it actually works. So eventually you start saying things like nothing works, trading is random, and the market's manipulated. It's not. You're just restarting the experiment every time it gets uncomfortable, and that's the worst part, right? This loop trains the exact wrong skill. It trains you to avoid responsibility because the strategy is always new. The loss is never yours. It was the indicator, it was the YouTuber, it was the signal, it was the market today. But it's never the decision. And that's the line, right? The moment you outsource the decision, learning stops completely, right? Because if you don't make the decision, you don't know why it failed. If you don't know why it failed, you don't know what to fix. So you don't fix anything, you just reset again. This is why retail traders just feel busy, but go nowhere, right? They're active, they're engaged, they're constantly changing things, right? But they are never building edge. And this is exactly why signals groups, copy trading, and strategy hopping all feel different, but fail the same way. They remove all ownership. They replace thinking with following. And it doesn't work. And, well, you know what? It might work for a little bit right up until the moment that it doesn't, right? So before we talk about entries, before we talk about setups, before we talk about what I trade, there's one distinction that you have to understand. And if you miss this, nothing else will matter. And that distinction, this is the point of the whole video. There is a difference between strategy and entry model. And most people don't realize this. And almost nobody actually knows the difference. And this is the part where most people realize, well, why nothing has ever stuck, right? And if you miss this, you can stop watching now, right? Because every entry after this is just going to be noise. Strategy and entry model are not the same thing. They're not even close. They are not interchangeable, and they are not supposed to overlap. What's a strategy? A strategy is an idea. It's the reason a trade should exist in the first place. And it answers a few very simple questions. What behavior am I exploiting? Where does this behavior matter? And what has to happen for the idea to be wrong? That's it. Those 3 things. Write them down. That's it. Remember, I didn't talk about entries. I didn't talk about indicators and no candle patterns or fairy dust or colorful rainbow charts. If your strategy tells you how to click, it's not a strategy. Here's a clean example. My strategy is to exploit liquidity sweeps at weekly and daily highs or swings and lows by trading into opposing liquidity once acceptance fails. That's what my strategy is. So what does that mean, right? I'm gonna say it again. My strategy is to exploit liquidity sweeps at weekly and daily highs and lows and swings by trading into opposing liquidity once acceptance fails. That's it. That's what my strategy is. What does that mean? Well, let's dumb it down. Here's yesterday's high. What's my idea? My idea is that we sweep the daily high, right? We exploit that liquidity. I'm looking for the acceptance to fail, fall back into range. That's the idea. That's what my strategy is. Daily highs, daily lows. Yesterday high, yesterday low. Weekly high, weekly close. Last week's high, last week's close. How many times a week do you think we do that? 10? Probably. Bitcoin has way more than the others. But NQ, 3 to 7 times a week, right? ES, 3 to 7. Gold, 3 to 7. Maybe more, maybe less, depending on the week. Point is, it happens often, right? So that sentence tells me everything I need to know. It tells me what behavior I care about. It tells me where I'm allowed to look. And it tells me when the idea is invalid. And notice what it does not tell me. It doesn't tell me how to enter. It doesn't tell me when to click. It doesn't tell me what time frame I'm on. And that's intentional because a strategy should still exist even if you never take a trade. If price accepts and keeps going, the strategy failed. Not the entry, but the idea failed. And that distinction matters more than most people realize. Now let's talk about the entry model, right? The entry model is not the idea. It's permission to execute, and that's it. My entry model says, after a sweep of a weekly or daily level, I wait for a reclaim. I verify trap traders using Delta, and I only execute during New York session. Now notice, that does not decide direction. That doesn't decide bias. That doesn't decide whether the trade should exist. It only answers one thing. When am I allowed to click? And this is where retail completely loses the game in the plot. They think the entry is the strategy. So when the trade loses, they think the strategy failed. No, bro, slow down. You had a bad idea. That's it. Or the market didn't give you the behavior you needed. Or acceptance happened and you ignored it. But instead of evaluating the idea, you start shopping for a new entry. And look, here's the proof. Here's the proof that these are 2 different things. I can take this same exact entry model, same reclaim, same trap traders, same session filter, and apply it to a completely different strategy. VWAP projection, range high, daily trend line, fib level, moving average, whatever. The entry doesn't change. The idea does. If your entry model changes every month, it's because you never had a real strategy to begin with. You were just clicking patterns and hoping one of them paid. Here's the most important part. When you separate strategy from entry, losses become useful because you cannot ask the right questions, right? Did the idea fail or did the execution fail? Those are very different problems. If the idea fails repeatedly, you stop trading it. You don't force it, right? You don't tweak the entry. You don't cope. You accept that the market isn't paying that behavior right now. And I'm gonna be honest with you. For the last 2 weeks, right? I trade Bitcoin and NQ, more so Bitcoin. For the last 2 weeks on Bitcoin, the market has not been paying my behavior right now. Maybe next week it does, but it's not. I haven't traded that many times. If the idea works, but your execution is sloppy, we can fix that, baby. Timing, patient, risk, but you can only fix execution if the idea is sound. And this is why professionals don't obsess over perfect entries. They obsess over correct ideas. Because if the idea is right, you can be early, you can be late, and you can be a little sloppy and you still survive. But if the idea is wrong, no entry in the world saves you. And retail has this completely backwards, right? They think better entries will save bad ideas, but they're not, right? So if you've ever said something like, my strategy doesn't work, maybe I need a better entry, pause, because that's not right. You need a better understanding of what decision you're actually making. And this separation is the foundation, right? If you don't get this, signals will always look attractive. Copy trading will always seem tempting. And every new strategy will feel like it's the answer, right? Or indicator, because you're not actually trading ideas, you're chasing outcomes. And the markets, they don't reward that. Now, I want to show you exactly why signals groups and copy trading and all this stuff fails, right? For the same reason too, and it's not emotionally or structurally. Once you see it, you're not going to unsee it. Now, let's kind of bring some of this together, right? I mentioned signals groups, copy trading, strategy hopping, indicator hopping. Look, on the surface, they all look different, but they're not. They all fail for the exact same reason. They remove ownership, right? It's the same thing when starting out and you start copying other people's strategies and stuff, right? They're not your own, right? And that's okay at the beginning, but look, they all remove ownership. And let's start with signals, right? Signals groups, or even those buy and sell indicators that you see out there, or the new thing now, right? Which is like AI. AI can trade for it. No, it can't, dude. Look, signals don't fail because they're always wrong, right? I'm not saying that. That's not the real issue. They fail because execution is personal, right? You can take the exact same signal, same level, same direction, same stop, same target, and 10 traders will get 10 different results. Different fills, latency, account sizes, risk tolerance, psychology. So when the trade loses, not a single person knows why. Was the idea wrong? Was acceptance happening? Was liquidity actually trapped? Was it a real break? Was it a real bounce? Did the market just not have participation? Nobody knows, because no one actually owned the decision. And this is where the damage happens, right? You don't review, you don't isolate, you don't learn, you just wait for the next alert. And copy trading is worse, right? It's signals with delayed pain. When you copy a trader, you're copying the action, right? You're not copying the reasoning. You don't know the thesis. You don't know the invalidation. You don't know the expected drawdown. You don't know how many losses in a row are normal. So when that drawdown does show up, and it always does, your brain freaks out, you panic, you question everything, and you shut it off, right? And when do people always shut it off? Max pain, right before potential recovery. That's not bad luck, that's structure. And strategy hopping or indicator hopping is the same thing. It's just slower. You're not giving an idea enough time to prove or disprove itself. You're bailing the moment that it feels uncomfortable, so you never collect evidence. And because you never collect evidence, you never build conviction. And without conviction, every loss just feels personal, right? And that's a common thread. Retail doesn't fail because they're stupid. They fail because they don't own the decision. They don't own the strategy. They don't own the process. And if you don't own the idea, you can't evaluate it. And if you can't evaluate it, what? You can't refine it. And if you can't refine it, you're stuck, right? And this is why people trade for years and stay break even or just lose over and over again, right? They're busy, they're active, they're engaged, but they're never building edge. Now, here's the important part, right? And this isn't a mindset issue. It's more of like a structural one, right? Like a losing trade feels like a broken system. A drawdown feels like failure. And the only emotional escape is to reset. But when you own the decision, everything changes. Now a loss tells you something. Now you can say, did the idea fail or did the execution fail? And that question alone puts you ahead of most traders. This is where charts matter, because this isn't theory. I can show you, right? I can show you all the time, like same entry model, same execution. One works, one fails. Why? Right? The difference isn't the entry. It'll be acceptance, it'll be liquidity, it'll be participation. That's the idea, right? And once you see that in real time, you stop blaming entries. You stop chasing strategies and indicators, and you stop, looking to signals groups, and because now you understand what decisions you're really making. And that's what we're going to look at next. We're going to walk through a couple of chart examples, different strategies. We'll stick with the same, maybe we'll switch up entry models, but I want to show you exactly what this looks like as it's happening. Instead of me just telling you, I want to show you, right? And when you're done, I'm going to close this out with one rule that should have saved most traders years, would have really at the end of the day, saved traders years. It would have for me, years of frustration. So let's get into it. All right, so let's ground this into something real. Here is a gold chart, higher time frame, swing context, right? And before anyone asks about entries, indicators, time frames, stop, right? None of that matters yet. Here's the idea first. Gold breaks the high. Participation, picks up, volume confirms. If that happens, the idea is continuation. Now, that's not because I want it higher. It's not because I'm bullish. It's because acceptance above the high tells me buyers are in control. That's the strategy. Now, on the flip side, if we get rejected there or sweep it, right? I'm looking for trap traders. I'm looking for participation to wind down. I'm looking for trap traders. That's it. That's the idea, right? The idea flips. Longs get trapped, they get stomped, and shorts enter on that failure. Again, that's not an entry, that's an idea. Notice what I haven't said. I haven't talked about where I click. I haven't talked about a candle pattern. I haven't talked about a stop loss because none of that matters if the idea is not clear. The entire chart comes down to one question. Does price accept above the high or does it fail and rotate lower? That's it. And this is where retail already messes it up, right? They start arguing bias. Gold is bullish. Gold is overextended. Gold can't go higher. RSI says, we're oversold or overbought on this thing. I don't care, right? I'm not trading opinions. I'm trading behavior. If price breaks the high and holds, the market is telling me something. Participation agrees. Volume agrees. The idea is continuation. If price doesn't, right? Breakout longs are trapped. Late buyers are wrong. And now downside liquidity becomes the target. And here's the key line. The trade is already decided before I even enter, right? My entry model only exists to give me permission to participate. It does not decide whether continuation or failure is correct, right? That decision happens here, right? At these higher time frame levels. This is why entries don't save bad ideas. You could have the cleanest reclaim, perfect timing, textbook execution, and if price accepts in the opposite direction, you lose. Not because you entered wrong, but because your idea was wrong. That's not a problem. That's information, right? Now think about how this would look as a signal. Buy gold here, target here, stop here, right? There's no context. You don't know what acceptance looks like. You don't know when the idea is invalid. You don't know if continuation or failure is the play. So when it loses, you blame the signal. Because when you own the idea, losses don't shake you, right? Because you already know what has to happen for you to be wrong. So this is the first layer. Right? Higher time frame, clear highs, clear lows, break and accept, continuation, break and fail, reversal, right? Everything else, entries, lower time frames, execution, that comes later, right? But if you don't get this part right, you're just clicking. And look, you're clicking without an idea, and that's just gambling. That's all that is at the end of the day. Now, here's an example of where the idea fails, but the entry could look perfect, especially if you're not patient. So we have a breakout above the weekly high here for Bitcoin. We have all kinds of longs piling in. So as price starts coming down, they're all of a sudden trapped, but we never reclaim the level, right? So the idea failed, even though the entry, at least to someone who's not super patient, looked juicy, right? All of a sudden now, thousands and thousands of contracts trapped. So you jump in, and then what happens? We chop sideways for a while, you're sweating, price goes up, takes you out because your stop's above that high, and boom, you're out, right? As opposed to just waiting for that idea to be confirmed by the market. All right, so to wrap up, here's what I want to be very clear about this, right? Because this is where they usually get defensive, right? Look, every strategy works for somebody, and every entry model, it probably works for someone, right? But not every strategy works for you. And not every entry model fits how you think, how you react, or how you manage risk. That's not a flaw. That's just the reality. Humans are different, right? Our psychologies are different. Our risk tolerance is different. The mistake that retail makes is trying to borrow someone else's edge. An edge doesn't transfer like that. Your edge is not a setup. It's not an indicator. It's not a screenshot. Your edge is a combination of how you see the market, what behavior you understand, and what you can execute consistently without lying to yourself. So the next question logically is, where do I start, right? Not with entries, not with indicators, and definitely not with signals or copy trading. Pick a behavior, not a setup, right? You should start by choosing one behavior to study. One. Breakouts, mean reversion, liquidity sweeps, trend continuation, failed acceptance, breaks, bounces, sweep. I don't care which one, right? But you pick one and you stop shopping, right? Pick one behavior and you ask a simple question. When does this behavior actually work and when does it fail? And most people skip that because it's boring. But this is where Edge is built. Now, step 2, define a strategy in one sentence. Dude, if you can't explain your strategy in one sentence, then you don't have one. Not a paragraph, not a thread, one sentence. What behavior am I exploiting? Where does it matter and what invalidates it? If you can't answer those, you're not ready for entries yet. So step 3 is only then can you build an entry model. So once the idea is clear, I am looking for sweeps of the weekly levels or of VWAP or of an anchor, whatever it is, right? Once the idea is clear, entries get boring, and boring's good, right? Your entry model should do one thing and one thing only. Give you permission to execute with defined risk, 1% on your account, right? Pick one, reclaim, structure break, momentum shift, delta confirmation. I don't care which, but you pick one and you stop tweaking it every single day or every single week. And then this is where tools can finally come in, right? Order flow or indicators. So tools, they don't create the edge. They don't predict the future. They just reveal behavior. And if you don't know what behavior you're looking for, tools are just going to confuse you, right? Order flow tools, delta, CVD, volume. These help you see participation and trapping. They don't tell you what to trade. Indicators, right? MACD, VWAP, moving, whatever. These help you confirm structure, momentum, and value. They don't give you permission to click. If you're using indicators to decide direction, you've already lost, right? They should confirm what price and behavior are already telling you. And look, here's the part that people don't like. You don't need many tools. You need a couple that you understand deeply, right? And step 4, stay with it long enough to prove it. This is where the edge is actually earned. You trade with the same idea, same entry model through wins and losses. You log it, you review it, and you separate idea from failure, from execution failure, right? So idea failure and execution failure are two different things. And this is the part that people don't like, right? Is me saying, guess what? You have to stick with one idea, one setup, couple indicators, and do it 100 times. Do it 200 times. Do it as many freaking times as it takes for you to learn to know when the idea fails or the execution fails and you patch the holes. That's how you get good at trading. It's hard work, it's discipline, it's actually doing it. And over time, guess what? It starts clicking. You stop guessing, you stop panicking, and you start recognizing when the market is paying your behavior. That's edge. Most people never get here because this takes patience and ownership and boredom. And most people would rather chase hope. And hope is not a strategy. Hope is why 95% of traders lose money. They want the answer. There isn't one. There's only process, right? And this is exactly why we built our free training, our Discord and everything, right? Not charging you $1, right? It's not to give you a magic strategy. I don't own a Lambo. I have a dad Tahoe, right? My biggest flex is that I have 7 kids, right? I basically have 7 Lambos. It's to ground this in reality, not fantasy, right? Not give you some hype it up and talk about magic crystal balls. No, but to teach you to think through this step by step, right? We have free training. It doesn't cost you $1. Start here. Go to tacticaledgetraders.com. Watch the videos, hop in Discord, join our free weekly meets on Sundays. We break down, right, how to define a strategy properly, how to separate idea from execution, how to use order flow and indicators correctly, and how to start building your edge instead of borrowing from someone else, right? If you're new, it gives you a foundation. If you've been stuck trading for years and feel stuck, it'll probably piss you off a little bit. And that's usually a good sign. It's free, it's structured, and it doesn't rely on hype. So let me leave you with this, right? And you know what? I didn't even show it on my screen. Here's the free courses, right? tacticaledgetraders.com, link down below. It's under Training Grounds. We have our schedule on here as well for when we go. We live stream every single day, free groups in Discord. And look, if you just want a no-nonsense group who goes about this, who struggles together, who wins together, who's just trying to get better and better every single day, you found the right home. But let me leave you with this, right? You don't need a better entry model. You don't, right? You don't need a better entry, I should say. You need to know what decision you're making. Once you own the idea, everything else gets easier. Losses make sense. Wins no longer inflate your ego, and consistency stops feeling random. If you take nothing else away from this video, take this, right? Markets do not reward perfect clicks. They reward traders who understand why they are in the trade and exactly how they're wrong. And if you don't, you're going to keep starting over.